Morning, guys. It's Wednesday, April 23rd, 5:24 a.m. Central Time. Grain markets are mixed this morning. July corn futures down a half cent at 482 and 3/4. July soybeans up 7 cents at 10.53. July Chicago wheat up 1 1/4 at 5.51 and a half. July Kansas City wheat down a half cent at 5.57 and 3/4. July spring wheat is up 3/4 of a cent at 6.11. Mackenzie, we hit 21,000 subscribers on YouTube yesterday.
That is fantastic.
We'd like to thank the people for hitting the subscribe button. Guys, if you are not subscribed to the channel, hit the button. If we ever get to 100,000, they send me a plaque. YouTube sends me a plaque that I can put in the background here.
Right around
I
the
don't think
corner.
we'll ever get there, though. I don't think there are 100,000 people on the planet that care what corn prices do every day, but we'll keep trying, right? Let's start off with Trump and China. He was talking yesterday.
He sure was. So, President Trump is considering reduced tariffs on Chinese imports. It will come down substantially, but it won't be zero, said the president late on Tuesday. Trump said that he plans to be very nice to China in any sort of trade deal talks and that tariffs will drop if the countries can make a deal. We're going to be very nice and they're going to be very nice, and we'll see what happens, said Trump. The president may feel some degree of pressure to make a deal as equity markets fall and interest rates remain relatively high.
Yeah, a lot of people think this is like the markets pressuring Trump to do something, or that he feels some degree of fear because of what's going on in the equities and the treasuries. Let's go to what Bessent said, because it's kind of the same story.
So he expressed confidence that trade tensions between the US and China will ease in the coming months. Yesterday, Scott Bessent stated that the 145% US tariff on Chinese goods and the 125% Chinese tariff on US products are not sustainable. He believes tensions between the two countries could ease in the near future, but reaching a full agreement could take 2 to 3 years. Bessent's comments sent stocks higher yesterday, with the S&P 500 gaining 2.5% and the Nasdaq and Dow Jones both climbing 2.7%. Negotiations with China have yet to begin, and it's unclear if President Trump and Xi Jinping have even spoken.
The tariff rates appear to be unsustainable. I mean, 125%, 145%. It can't last. It's too much. It's going to be very, very painful if it does last. So you've got a more dovish tone coming out of the White House, both Bessent and Trump. This appears to be a kind of like a prearranged, targeted message, I think. Some people think that Trump is panicking. One analyst quoted in the Bloomberg piece said this: Trump is panicking due to markets plummeting and still very high U.S. Treasury yields. He needs a deal, and quick. China does not need to offer anything big in such circumstances. I'm not sure I agree with that. I see why Trump would maybe be concerned about the markets, but I feel like China is probably equally concerned, if not more concerned, about their economy and the markets as it relates to all this. Let's look at some of the markets. The S&P 500 has had a wild month so far in April. We were able to hold trend support. You draw this trend line from the COVID low up through the 2022 bear market low, and that's almost exactly where S&P 500 futures held earlier this month. So we've seen a bounce. We saw a bounce yesterday. We've got a rally going here this morning, probably on some of these Trump comments. We're still down 10% year to date, but it could be worse. Here's the 10-year Treasury yield. This thing peaked at just over 5% August of last year, and at 4.34% on the 10-year Treasury. We're probably a little bit higher than most people would like to see. This is something that is very, very interesting, and we had a really great premium video about it yesterday that I'll talk about here in a second. Soybean prices are up this morning, perhaps on this chatter that Trump and the White House maybe will go a little bit easier on China. If we can get this July contract up above that 10.59 level, that would be seen as being very positive. I'll do our ad real quickly right now. The biggest thing nobody talks about with Jim, we did yesterday. Jim is a professional interest rate trader, has been for decades, and he has a theory about interest rates and commodity prices that you should hear. It's very, very interesting, and it is the biggest thing that nobody talks about. What do we talk about? How many acres are we going to plant? What's the weather look like? All that stuff matters. It absolutely matters. But maybe there's one big thing that you're missing with regard to interest rates and the Fed in particular. Also, earlier this week, I did new crop corn target orders. My exact thoughts when it comes to new crop corn and soybean marketing. I laid out exactly what I've advised, and we're advising moving forward. My cash grain marketing recommendations are super easy to follow. There's nothing you can't understand. No option strategies, nothing fancy. It's just, hey, we're going to sell this percentage of our production at this price, and we're going to work targets there. and I break everything down by crop year, and percentage. If you're looking for a simpler approach to your grain marketing, you should check that out. Go to standardgrain.com. You can sign up this morning. I know you guys are busy. It takes 30 seconds to sign up on your phone. Google Pay, Apple Pay, Cash App, credit card. I'll send you a copy of this morning's email. It's one click to play the videos. Absolute piece of cake. Check that deal out this morning, guys.
Governors from 7 Midwestern states are calling on the EPA to issue emergency waivers for both E10 and E15 fuel. The governors are requesting the agency issue an emergency waiver to ensure consistent regulations for both fuel blends ahead of the summer driving season. They believe that consistent rules would improve fuel availability, reduce prices, and prevent logistical issues. While the EPA has approved year-round E15 sales in 8 states beginning this summer, the governors are seeking additional emergency relief due to ongoing fuel supply shortages. Similar waivers have been granted in previous years, and the current administration is considering doing so again.
Yeah, so there was a letter signed by a bunch of governors. I found it interesting that J.B. Pritzker, governor of Illinois, signed this. He's usually not on these things, and here he is. I could say a lot about Pritzker, but I won't. In any case, so they're citing this fuel emergency that they mentioned in this letter. I don't understand where the fuel emergency is. Tell me if I'm wrong. The national average gas price is $3.14. That's down 53 cents from a year ago. The national average on-road diesel price is $3.53. That's down 46 cents from a year ago. It feels like maybe they're trying to manufacture an emergency. I mean, I'd love to see cheaper gas prices. I'd love to see gas at $2. I just think that using the word emergency here may be slightly overzealous. Maybe I'm wrong about that. But in any case, I'm all for it. Let's do E15 everywhere year round. How about it?
South Dakota has rejected Summit Carbon Solutions carbon pipeline application. On Tuesday, the South Dakota Public Utilities Commission voted 2-1 against the application. The decision follows a recent state law that was passed in March banning the use of eminent domain for carbon capture projects. Without that authority, Summit had to rely on voluntary agreements with landowners along the planned route, which would have been quite the challenge considering the extreme pushback by landowners in the state. In response, Summit plans to refile its application with a revised, shorter route to address concerns from landowners and plant partners. Summit has already received regulatory approvals in Iowa, Minnesota, and North Dakota.
Here's a map of the Summit pipeline as it's proposed currently, and South Dakota, of course, is very, very important. So they're going to go to individual landowners now and try to do it that way, which seems like that would seem like a very messy, long process. But I guess that's where we're headed. So this is another step backward for Summit and for pipelines and for carbon sequestration. And I understand that opinions are drastically differing across the board and contrasting. I myself have I know the pros and I know the cons. I understand it. I know the eminent domain thing is a big deal for a lot of people, but it's a setback.
The CME is challenging the MIAX futures exchange by launching its own spring wheat futures and options contract. The move follows MIAX's decision to shift its spring wheat contract off CME's Globex platform. While there are around 30 million acres of spring wheat production across the US and Canada, traders worry the market may not be large enough to support 2 rival contracts. There are also concerns that the 2 contracts could split liquidity and weaken the overall market. To attract interest, the CME is offering discounted rates for spread trades on its Globex platform, where the new spring wheat contract began trading last week. MIAX, however, holds an edge with its historical pricing data and a record-setting volume and open interest in its wheat contracts.
We need 2 spring wheat contracts like we need 24-hour cattle trade. It's just not necessary. In any case, though, if they're really going to kick the MIAX, which is the Miami International Securities Exchange, they bought the Minneapolis Grain Exchange in 2020. If they're going to kick them off Globex, then maybe the CME contract does gain some traction. CME, of course, is out there to make money. They want trading volume, and they'll probably be able to make a little bit more money if they've got their own contract. I don't know how this is going to work out. It could be messy for a minute. It's not a market that requires 2 contracts, I don't think.
The International Monetary Fund has lowered its global economic outlook and cut growth forecasts for most countries. For the US, the MIF reduced its 2025 growth forecast by 0.9% to 1.8% and its 2026 forecast to 1.7%, citing rising tariffs and policy uncertainty. U.S. inflation is now expected to reach 3% this year, 1% higher than earlier projections. While a recession is not expected, the likelihood of one has increased to 37%, up from 25%. Globally, economic growth is projected at 2.8% this year, down 0.5% from prior estimates. The forecast for global trade growth was also revised sharply lower to 1.7%, half the pace seen last year. A major driver of this slowdown, of course, is the sharp increase in tariffs between the US and China, which is projected to decrease bilateral trade by about half.
You got all these projections for reduced growth because of the tariffs, yet it's a situation that could change in the blink of an eye. I mean, Trump could get on the phone with China later today and there could be a deal. And all these charts and graphics and projections that have been made, they could all be wrong. I'm not sure why we should take what the IMF says seriously. The IMF is an organization that's kind of like a safety net for countries around the world. It's made up of 190 countries. They promote global economic stability. They support currency stability. They provide economic and financial assistance to countries in crisis. That's one of the big things. It's kind of like all these countries, they get together, they pool their money, and if one of them has problems, they can throw some money at that particular country. But I don't think this is like, it's not crazy what they're saying, but it could change so quickly.
The U.S.-China trade war is expected to impact Southern California's trade and logistics sector. The sector, which provides nearly 2 million jobs, handles a third of our nation's container cargo. Trump's 145% tariff on Chinese goods is projected to reduce import volumes through the ports of Los Angeles and Long Beach. China's 125% tariff on U.S. goods is also likely to diminish outbound shipments. Overall, shipment volumes are expected to decline by 10% as early as next month and continue falling throughout the rest of the year. Despite these concerns, some economists believe the tariffs may not affect port and logistics employment, noting that previous tariffs had minimal impact. Additionally, ongoing unrest in the Middle East and low water levels in the Panama Canal have shifted more shipping traffic to California, giving ports a boost in traffic.
Yeah, this is where it starts to get real, and this is where the tariff thing could become inflationary to a significant degree. And I think it's partly for that reason, perhaps, that Trump and Bessent are easing here and realizing that we've probably got to get something done with China in short order. What did cattle do yesterday?
Cattle futures were higher. Live cattle saw gains ranging from 75 cents to 252. Feeders were $1.40 to 240 higher. Box beef was lower. Choice was down 179 at 331.73, and select was $1.12 lower at 317.65.
Stock market is rocking and rolling this morning, I suppose, on the comments from Bessent and Trump continuing yesterday's rally. The Dow's up 700, the S&P's up 125. Bonds are up a full handle, which means interest rates are down. U.S. dollars up just a little bit. Crude oil is up 70 cents at 64.37 in the June WTI. Gold's down $76. So kind of a reversal in some of the recent trends we've seen. Have a great day, guys. We'll be back on Thursday.